Time for another stock review. This is a service I provide for my members. We are looking at SPYI, NEOS S&P 500 High Income ETF. Now, when I do reviews, I generally review stocks, not ETFs. Stocks is a much more comprehensive service, as I can show much more information on them as opposed to an ETF. So my stocks reviews are my main bread and butter, if you like. The ETFs aren't quite as comprehensive as I would like them to be as they are with the stocks. But nevertheless, this was asked to be done by one of our members, Scalding Hot. You are at the top of the list. It's Members Week. I'm going to go through all my reviews. There's about 20 to do, and I'm going to do them all and create their own videos. So let's go straight into this one. NEOS S&P 500 are high income ETF. Well, you can see it's not been out that long. If we look at the inception date here, back in 2022, so going to be difficult to compare an ETF of like this, for example, to the general S&P VOO or SPYI, for instance, because it's only been out a couple of years, but it's already very, very different. And I'm going to go through some of these details for you. So if you like this sort of thing, please do tap the like button, consider subscribing to my channel as well, and I will do a review for you. It's what I provide for my members. If you are a member, a $1 super chat, you will go at the bottom of the list, and higher up, more, you'll go towards the top. This is a $20 super chat, and it's being done first. So, and we're going to go through them all over the next few days. So let's read a bit about it. SPYI aims for a tax efficient and high monthly income by actively investing in stocks and options on the S&P 500. The index employs a call spread approach that uses SPX index option future contracts. The listed name for SPYI is NEOS S&P 500 High Income ETF. Now, first of all, you are investing in contracts. I don't like options. I'm not an options trader. It's not my field of expertise. Not the best person to ask about it. There are other members in our channel in Discord. Sensei on Sunday will talk to you about options, and other traders in Discord will. It's not my thing, and I'll explain why. I like to own the business. To me, a contract, remember, a contract is 100 shares of a stock. That's what a contract is. That's very often why a stock will split, to make more people be able to afford to buy 100 shares if they are doing options trading, if the stock gets too high. And basically, it's like going to my attorney or my solicitor or my lawyer, depending on where you live in the world, saying, I would like a contract drawn up to buy this house. I'm not actually going to buy the house, but I want a contract to say I have the right, no obligation, but I have the right to purchase the house for this price at this date, and so on and so forth. And you pay your attorney, solicitor, lawyer a fee to draw up that contract, and you can buy that contract. You've not bought the house, but you've bought the contract with the right, but no obligation to actually purchase or sell that contract. Okay, I don't like any of that stuff, because at the end of the day, I like to actually own the piece of the pie itself. That way, I haven't got to predict the price. I haven't got to predict the date. I don't care where the market is going today or tomorrow. I just want to own the business. The stocks can trade up, they can trade down, options come in, come out, whatever, expire, whatever, mature, whatever they might be. I am only interested in owning the business and allowing the business to work for me 24/7 long term. And one day, 20, 30, 40 years from now, I might sell, or I might just be passively taking dividends or whatever it might be. But I'm not looking to trade. So for me, options is not a thing. It's not a thing I like to do. I like to actually own the piece of the business. and it goes to work for me. I don't have to own I'm not interested in contracts. Options is not my thing. So don't judge me on it. It's just not my field of expertise. There are others that can help you on it. But anyway, let's go down and look at this. Actively managed, and we're going to compare to the S&P VOO in a few moments' time, and you can see how it compares and the cost of it as well. What's in the fund? You can see the sectors there. You can see there's technology, financial services, healthcare, consumable, cyclical. What I will do is actually, if I bring up VOO at the same time, it's probably a good idea to compare the allocations. Now, VOO and SPYI are exactly the same, so we could just use SPYI, but I'm going to, just for argument's sake, use this. If we look at VOO, technology is 32%. Whereas technology on this is 33%. Financial services on our SPYI is 12.53%. And on VOO, 12.62. You can see it's virtually identical. Healthcare, 11.89 on VOO. The standard, 12.07. Now, for most people, it's about the same, okay? Very, very slight differences. Not going to make that much difference. Consumer cyclical on SPYI is 9.44. Over there on VOO, it's slightly different, 10.18. So there are some subtle differences, but not much. That's not the main difference with this stock. But we'll carry on going, and I'll bring it to you. The volume on the stock, 270,000 today. If I scroll down to VOO, much more volume, much bigger interest here, 1.18 million. If we look at the average volume is 5.3 million on VOO, and on this SPYI, the average volume is 642. So much different, a greater difference there in volume. Now, what is important, if we look at the price to earnings ratio, 25.8 on SPYI, and on VOO, we are looking at 26.32. Not much difference, but a little bit. It's slightly more expensive owning VOO than it is owning SPYI. What's important is the expense ratio. Expense ratio, this is why I have VOO over SPYI, just SPY. As the expense, it's exactly the same as SPYI, but the expense ratio is 0.03, and it's much more expensive on SPY. Let's compare that to SPYI. So 0.03 is on VOO. If we go over now to SPYI, it's 0.68. So it's a lot more expensive on SPYI. So that's already a downside to it. But also, and this is an important thing here, it's not, it has no underlying index. All right, it doesn't track the S&P the same way. It simply buys those shares in the proportions, the allocations that we've talked about, but it's not tracking the index. All right, it's a completely different thing. Whereas you can see here, if I compare the two side by side, the VOO Vanguard 0.03 expense ratio is a fraction of NEOS investment cost, 0.68. It doesn't, and VOO, of course, like the regular SPY, it tracks the S&P 500. Now, that's what I like. The S&P 500 is what I want to own. I don't want something that is independent of that. It has no underlying index. It does not track the index. Doesn't work the same way. It's a completely different thing. If I scroll down here and show you over the last, since we were able to track it for the last 2 years, you can see it underperforms the S&P. VOO, in other words, you can see it underperforms quite a lot. If I share with you on the chart this way, if we show you over the last year, right, this is NEOS, S&P 500. You can see over the last year, it's made you 4.42%. If we look at VOO over the last year, 18.8%. It's very different. The S&P VOO SPY tracks the S&P. You're following the index, whereas this particular stock, it's whether people buy this stock or sell this stock. It works differently. I don't like it. It's not something for me. I'll tell you right off the bat, I wouldn't be interested in this stock. I'm not an options man. It doesn't track the S&P, so it's not the same at all. It's a completely different animal. So for me, I'll tell you now right off the bat, this isn't for me. Now then, there is some news around it. I'm going to share with you. If we look at the ratings for it right now, this is what TradingView is saying. Neutral to buy to strong buy when it comes to buying it right now. We've got some news on the stock. I want to share this with you. Seeking Alpha, sell and hold, was the very opposite of VOO, the S&P 500. Okay. Expense ratio, D+. It's not very good. It's very expensive. Momentum is D+. Dividends, however, is A. Now, this is where you earn a bit, okay, with the dividends. If we can compare the dividends a moment, if we look at the 30-day yield on SPYI, 0.75. On VOO, it's 1.26 30-day yield. All right. This is SPYI, 0.75. And on the VOO, so this is getting a bit complicated, I realize, 1.26. So VOO beats it on dividends as well. Let me give you the news here. I want to share this with you. NEOS S&P 500 Income ETF declares 0.55 dividend. Now, you can't compare that to the S&P. The S&P pays $1.76, I think it is the most recent one, $1.76, $1.80, right? But it's a completely different animal. It's $400 a share. This is like $50 a share. So it's completely different. Let me give you the news though. NEOS S&P 500 Income ETF declares 55-cent share monthly. This is a monthly dividend though. It's not a quarterly dividend. All right, it's a completely different animal. Payable to shareholders. The next one is August the 21st. That was the ex-dividend date, I think it was. Yes. This is a monthly income. Let me go down here. I'm reading this for the first time, right? More on NEO S&P, 7% yielding dividend portfolio from SF and 3 other funds. Let's have a look at this. Building a passive income stream from dividend stocks requires significant time and effort for proper diversity. Now, I'm going to talk to you about dividend. This is a high dividend paying stock. Let me just explain this. If you are buying a dividend stock, a high-paying dividend stock, you're probably going to get less of a growth. You can't have both. You can't have high growth and high dividend. It's not possible. You need to decide what sort of investment strategy that you have. For me, if I'm in my 20s, 30s, 40s, early 50s, I'm looking for a growth stock, a stock to grow, and then I amass a sum of money. Then I can move into high-paying dividend stock. Because remember, a dividend stock is a passive income. You might not want to take any money. You just want to grow your portfolio. So for me, a dividend-paying stock is when you're at the end of your cycle, if you like. You've built up your portfolio. You've got $1 million in it, whatever it is you want. And now you want it to pay out a dividend. Now you want, or an income, or maybe you want to sell, or whatever you want to do. And a passive income is one way of doing that. And depending on how you are structured from a tax point of view, will determine how you get paid out, whether it's tax-free or whatever. Move it into a trust, or if it's on an IRA or whatever. But for me, I'm still at the time of building up a portfolio. I want a high growth stock. I don't need to be paid out. Now those dividends are nice on VOO. Those dividends coming in are nice, and I use them to pay down my margin so I can own the stock. That's what I'm trying to do, build up my portfolio. So as So as I get paid out on VOO, that's covering the cost, if you like, of my interest payments on VOO at the moment, because I went all in on margin and so on and so forth. As the dividends increase, which they always do, and the rates go down, the cost of my borrowing is going to get less. That's what I'm using my dividends for. I have a specific reason why I want the dividends paid out. They're going to be just brought in to my portfolio to pay down my margin, as well as me paying back every month when I get paid on YouTube. But you might be looking at this differently, and you're looking at it from the standpoint, I'm trying to receive an income. But for me, I'm not at that age. I don't need this to pay out. I just need it to accumulate. So this kind of ETF doesn't suit me. It's not one that I particularly like, I have to be honest. I prefer one that tracks the S&P because of the history and the way it operates. Also, it's far cheaper to own and manage. The management, the expense ratio is far lower on the on VOO, which is cheaper than SPYI, and this is even more expensive. So I don't want to do that, because I'm not looking at taking income. If you are looking at taking income, you might like this, but I prefer a stock that actually owns the stock rather than the options, and I also prefer a stock that's focusing on growth rather than taking out the options for me. But this is, this might suit you. It doesn't suit me. Now, this isn't a full in-depth review that I can normally do, because I prefer the stocks the way they are laid out. This is an ETF is not one of the things I specialize in. It's not really my field of expertise, but I've been asked to cover it by Scalding Hot, so I wanted to bring your attention to it. Let me just bring it up on the screen once again. SPYI, NEOS. Now, do you like this stock? Does this suit you? Is this something that you're interested in? It's not one for me. I wouldn't invest this way. But if you're looking for a passive income later on in life, maybe you've built up your nest egg, you've got your $1 million, your $2.5 million, like Mia earlier, whatever it is you wanted to get, and you want to be in the S&P, but without tracking it, this could give you that dividend yield that you might like. I'd like to do further research on this, but it's not one for me. I have to be honest. It doesn't follow the index the way I would like it to. I don't think I've got any comments coming in regarding this, so I think I will end that just there. There's my initial look at SPYI, Scalding Hot. That's with your request. Do you like this one? Is this one for you? Does it interest you? Let me just before I do close this out, and we'll see if there's anything else there I can get from it. No, I think I've pretty much covered everything I want there for now. I will go back and research this over time. It's got no history. I don't know how it's going to perform over time. So it's not one for me, but the dividend might be of interest to you. Click above my head for all the links down below in the description. Over here, I'll put my Alpha Spread playlist where I've reviewed over 200 individual stocks. If you put that in there, I will take a look. You can take a look at all those. Down here, I will create a playlist for SPYI. So as we get more news, more information, we can build out our knowledge on it and learn more about it. And I'll add that to the playlist. Until next time, as always, take care of yourselves and each other.